Todd Sachs of Sachs Realty. For those of you that do not know who I am the broker and founder of Sachs Realty. I'm a Maryland real estate broker. If you're joining us via YouTube or in another state, maybe Facebook, but you're in another state, we are in Maryland. So we're going to go over a lot of Maryland updates in the markets that we primarily work within. And if you're watching this later, feel free to reach out and give us any of your comments, as well as subscribe to our YouTube channel and follow us on Facebook. And as always, we do appreciate your comments. So we're still, obviously, everybody knows, Maryland has really not opened up in phase one yet with the COVID-19, and a lot of states have. I think 33, don't quote me on that, but I believe 33 states are in phase one, and we're getting around to it. So I know there's a lot of pressure on the governor, and we just have to trust that the administration is doing what they need to keep us safe. And but obviously, as well as really anybody that is working, is affected economically by this pandemic. And we want to just kind of talk about what's going on in the real estate market. So we really cover 9 markets in our business in Maryland, and we're going to go over those 9 markets. But also we have a special guest, John Seebeck, that is queued up to talk about what's going on with mortgage updates. We're going to talk about the different types of mortgages briefly and just kind of go over, what's going on. There's a lot of chatter, do I need a higher credit score? Is the money drying up? So we'll address some of those. We're also going to talk about what's going on with Sachs Realty. So we're in our 3rd year of being in business, and we launched in August of 2017, and we're going to bring you up to speed on some things that we're working on. We're very transparent. Hopefully, if you're watching us, you're not part of Sachs Realty, that you'll have some good takeaways, maybe some things that you could implement yourselves in your various businesses if you're not in real estate. And really, we're going to talk about open house rules and guidelines. I know that we did have an open house this weekend, and I want to talk a little bit about that and some of the guidelines and expectations. And, a lot of people are wondering, can we have open houses? Can't we have open houses? And what are some of the ways to have best practices? Also, we're going to talk about farming. So guys, I preach to you constantly. I believe that to be very successful in the real estate business, you should be listing focused. Because a lot of the times your clients who are selling are also buying, and it's great to really focus on selling and really farming. So we're going to talk a little bit about, I'm always preaching, own a farm. So we're going to go over that, and we're going to talk about Zoom, what we're on right now. I helped a friend of mine that has been in business in another industry for almost as long as I've been in business, for 30 years in the construction business. Been in it for 31 years now. And she was asking me for her help yesterday. She had to have her first Zoom meeting. So we're going to talk about Zoom and how you can utilize this platform to really help you to reinvent yourself and really incorporate it in your business practices moving forward beyond even where we are with COVID-19. We're going to talk about some advertising guidelines and just kind of refresh our agents on that. And then we're also going to address a couple Realtor Code of Ethics as far as, some things that have come across my desk in the last couple months, and just kind of review some things there. And then we're going to open it up to some questions and answers. And basically, if you're watching us and you would like to type a question in and chat with us, Melissa will be gathering those questions so that we can address those at the end. And also, we're going to have John with Mortgage Possible stick around as well, so that he can address any of your loan questions. So anyway, so let's go ahead. We'll just dive right in here. So when we had our last meeting 2 weeks ago, we were right in the midst of, it was the 21st of April. We were really in the hot and heavy part of the pandemic. We went over first quarter 2020 as well as first quarter 2019, and we saw that it really, things were still looking very positive, and the numbers were up. But really, the first quarter of 2020 only accounted for a couple, maybe 3 weeks of the beginning of COVID-19. So we spent a lot of time diving into up to the 21st of April. And some amazing things happened in that last 9 days or so of the month in April, and for the good. We saw a lot of positive activity as far as contracts and closings and days on the market and things like that. So we're going to take a little bit of time and just kind of dive into these 9 markets. If you're watching the recorded version of this, we will have a little note where you can advance if you're watching in these 9 markets. You don't care about these 9 markets and you want to get to the other parts of our meeting. But let's talk in alphabetical order here in the 9 markets. We're going to cover Anne Arundel County. Unfortunately, the MLS provides us with these beautiful graphics weeks after a month closes out, and that really isn't good for the purposes of our meeting, but really good for the purposes of keeping your thumb on where we are with the market. So I want to talk about the red is April of 2020, and that's all the way to the end of April, beginning to end in comparison to 2019. So when you're looking at this real attractive chart, we're really talking about only certain parts of it as it pertains to where we are right now. And then to the right column, we're going to see what has really happened with people taking their listings off the market. So let's just go through this. We will make this available for your download, that you can review this later if you're interested in this. CS is coming soon. As we in the industry know, this is at the end of April now. We had 100 in queue. New listings for April were 932, but they were affected throughout the month to a net result of only 402 of them stayed active in some capacity. And to the right column, people withdrew it, took it off the market. Some of these expired or were canceled. So pendings are things that are queued up to close. The big number here, 702, and last year this time was 1,157. That's a big thing to look at in each one of these slides. We're really down in pendings to close from April, and then closed transactions, 721, and last year, 818. And what you're going to find is throughout these slides, a lot of this isn't that much off, but keep in mind, we have a cycle in real estate to where, when things go under contract, we're looking at 30 days or 45 days sometimes before they can close. So a lot of the things that we're seeing that closed in April were in the hopper, prior to stay-at-home orders and this, major pandemic. Interesting, and you'll find this consistently through the slides, but the median sold price is up significantly in all 9 markets. So Anne Arundel County, we're 408,356 a year ago. And then really the active listings at the end of April, Anne Arundel County, 1,372 a year ago, 2,198. And let me just be reminding everybody, we've been in a housing shortage. It's been really a seller's market because there have been more buyers out there than sellers. So, you can only imagine what this is doing to our market right now. Really a lot of buyer pressure because we're still seeing, multiple offers and things sell in days. So let's go on through. So remember, this is alphabetical. So we're in Baltimore City right now. Coming soon's 52. New actives, 528. So basically a third of where we were last year. Pending 702 and pending closings 1126. Closed transactions in April, again down, but not as you would expect that we might see coming in May. Median sold, again up huge numbers, 172,500 over 150 last year, 151 last year. Active listings, again down about 750 in what was active as to a year ago, and our days on the market, being right around the same. It's dropped a little bit. But the right-hand column, again, these temporarily off the markets, there where clients have said, let's go ahead and wait a little while. Withdrawals have just taken it off. Expired is self-explanatory. They had a listing period, and then it's expired with their brokerage contract. Many of these just roll right into a new listing agreement, as we know, and then canceled 138. Baltimore County, again, consistent numbers. Coming soon's way down, 92. New listings, 381 in April. New listings a year ago, 1586. Pending, 749 as opposed to 1293. Closed right around the same numbers again. Median sold significantly up. Active listings, 700 down thereabouts from last year, and days on the market has reduced. Carroll County, coming soon's 34, new listings 86, and again that 261 is what the MLS registered as people that put listings in the month of April, but for whatever reason they were withdrawn or taken off. The real net number's 86. New listings last year, 370 in April. New pendings, 208. Almost down 100, or actually, almost down 100 from new pendings a year ago. Closed 183 for 207 last year. Again, not that much different. Median sold up significantly. A lot of driving factors of median sold prices could be new housing in the marketplace. Active listings down significantly, 323 over 496. Days on the market pretty much stayed the same. Frederick, coming soon, 57. New 206 opposed to 714 a year ago. New pendings 361, year ago 500, closed 348. Closed sales actually were up in Frederick County over a year ago. Median sales sold price, you can see, went up significantly again, and active listings significantly down by 400 thereabouts, and days on the market pretty much stayed the same. Harford County, 44 coming soon. New listings 112, pendings 317 as opposed to 461. Closed again up over last year, 313. And the median sold significantly up again, $40,000. Active listings way down, 418 as opposed to 725. Days on the market consistently about the same. Howard County, coming soon's 54. New listings 179. New pendings 260 over 535 of 19. Closed sales right around the same, a little bit less. Median sold, again, way over the top. Average listings down again, and average days on the market way down in Howard County. Montgomery County, coming soon is 147. New 1169 we started with. For whatever reason, we're netting 464 in April. New pendings, well, we know what for whatever reason, new pendings 414 as opposed to 1491, way down, guys. In pendings to closed a little bit less than last year, median sold way up, active listings way down, again 1342, and average days on the market right around the same. And then finally here we have Prince George's County coming soon, 68. New listings 384, 1348 last year. New pending 757 as opposed to 1361. Closed 745. Median way up again. And sold price, active listings 1097. And days on the market 30. And so pretty much the same. Let me just back up 1 second. I just wanted to tell you that the active listings, just so that you know, I mean, this is May, the first 5 days of May backed out. So, these are the facts. A lot of times what we hear people say is they're busy, they're not missing a beat, things like that, and trying to be very positive. This whole thing is centered around our market. I mean, we really weren't in a housing crisis. You can see the median prices are way up. And, but I think that if we wouldn't be looking at COVID-19, otherwise we're still in a very strong market. And, around the nation, things are certainly different. We're only talking about the Maryland market as we know it. We're a little bit more insulated here. We know that our employers, the top two, are insurance and government. And so we know that we have a tendency to be a little more insulated on a lot of the, downturns. However, we were one of the slowest to come back from the 2008 housing crisis. So that's it, the 9 markets, the updates. I think that when we look into May and we start covering, you guys will continue to follow this for you. I think that we will see the impacts. The question will be, no one has a crystal ball, but, with people not vacationing, typically in the real estate business, the spring is really our busy time because kids are out of school in the summertime and a lot of people want to get relocated. And but we start to come into some competition with people's time and where they focus on, because a lot of graduations and vacations and things like that, where I think, this year will be differently. I'm kind of hoping that the market does pick back up really quick once these, restrictions are starting to be released, and that we see that we're getting some good confidence back. I think that we will bounce back quickly in the housing market. But I do think that we will see some financial, some results of the financial crisis that is happening. I do think we'll start to see where people will sell their houses, maybe for whatever reason, they're, not taking back, they're taken back with their employer, and maybe they're brought back at less money. I mean, who knows? I'm hearing all kinds of scenarios out there and stories from people, friends of mine and business people that we've been consulting together. So, people that have purchased a house in the last couple of years realize, now they might not be able to afford their house. So rather than, go into a situation where they can't pay for it, we may see, influx in that market. I professionally believe that we're 4 or 5 months away from those kinds of, determinations to see, how that plays out based on consumer confidence coming back and timeliness on how we bounce back. So this time, and I'm going to moderate John a little bit just for keeping on the timeline, I want to introduce John Seebeck. He's with Mortgage Possible. And, he's got a pulse on this as they run a family-owned business. And John will let you kind of plug yourself at the end. But I'd like to jump right into this next slide and talk about, I know our agents are asking a lot of questions last night. I had one of my agents talk about a USDA offer that came across. So let's just kind of start and give us a quick, 30-second, boom, 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 right down the list here of what's going on in each one of these jumbo markets. John, welcome.
So jumbo loans, right now, it's kind of a tricky market right now. We do have takeout investors. I actually have a call today with my executive team to go over the direction we're going with jumbo. So technically, we are temporarily on hold with them, but we do have some negotiations that are at the table. So hopefully today I'll have much better guidance there. FHA, VA, pretty much business as usual for us. We've been a HUD-approved lender since going back to the mid-'80s. So we're still going down to 500 FICOs. We have not tightened our credit box. According to our CEO, we will not tighten our credit box because now more than ever, people need access to mortgage credit, unlike what a lot of the bigger banks are doing where they're really tightening up, 640, 680 minimum FICOs. We're still following HUD's guidance to a T.
So I hear that it's 50% harder to get a jumbo loan today than it was 30 days ago. Is that true or not?
That is true, yes.
And basically, jumbo loans, can you just kind of give an overview? I mean, they vary by county. You can find out by Googling what a jumbo loan is in each county, correct?
Correct. Yeah, so essentially what happens with a jumbo loan, you have the county conforming limits. Let's use Anne Arundel, for example, 517, 500. You're buying a house and financing over that limit, it's technically a jumbo loan. So, if you're buying a house for $600,000-700,000 and you're looking to only put 10% down, in that situation, yes, you are talking about a jumbo loan. Rewind, the clock, like you said, 30, 45 days ago, those programs were readily available across multiple platforms. Fast forward to today, because of liquidity concerns and everything that we saw unfold in the bond market in late March, we're still waiting for investor confidence to return to the market because the underlying loans are purchased by investors. Right now, investors are scared. Are people going to make their payment? And, right now you've got your Fannie, Freddie, FHA loans. It's all backed by the full faith and pledge of our U.S. government. Because you don't have that in jumbo, there's a little more concern from an investor standpoint. So I think as we start to reopen the state, I think like you were saying earlier, 33 other states have reopened. I think once we start to see a little bit of return to normalcy, I do believe that those jumbo programs are going to start coming back, pretty much to the capacity they were before.
Yeah. So FHA, so I'm hearing that credit scores have gone, you need to have a higher credit score now?
So FHA hasn't changed anything. So from HUD guidance standpoint, it's lender risk appetite. And for us, we've been doing it since the mid-'80s. Our CEO is committed to not touching our credit box, which means HUD, their position is they'll do down to a 500 FICO. So we are not changing anything. Other banks, Wells Fargo raised it to 680. Some of our local competitors, 640 is kind of their baseline. Anything under 580, HUD does require 10% down payment. But what we're doing is we're following the guidance from HUD direct and not overlaying it with any risk appetite or concern. We're looking at it saying, look, the market they need funding now more than ever. People are in a tough situation. So we've not touched the credit box.
John, quick question on FHA, and maybe you can answer if it's any different with any of the other programs. Somebody is furloughed or, laid off. Can they still buy?
They cannot, unfortunately. If they're furloughed, as soon as they go back to work and we can confirm with their employer that, hey, day one back to work is June 1st, as soon as we can confirm they're back to work and at the capacity they were prior to their furlough, we can go ahead and settle that loan. So there was some talk back at work.
Yep. So there was some talk where I heard a couple of people say, that if they had a letter or something like that they could still buy. So it's absolutely not true.
Not with us. Look, crazier things have happened. I know, every day is a new day in guidelines. So it's very possible something came out yesterday that, I'm not fully aware of yet, but I will 100% research that. But at the moment, our position is if you're furloughed, once you're day one back to work, we can go ahead and settle with the verification of active employment.
So real quick, you're in the middle of a deal and all of a sudden, the borrower gets that call. So, we've got a closing date coming up and, all of a sudden, hey, look, I'm sorry, but we're going to have to furlough you to July 1st. Deal's dead?
Deals on hold.
Right.
At that point, we can, all of our credit docs are typically good for a 90 to 120-day period. We've been working through those scenarios to do, free rate extensions to help our borrowers through that process.
Doesn't mean that the seller, but at that point, they're not qualified for their mortgage, and
Correct.
seller probably would move on. Okay,
Correct.
moving right along. VA, any major changes?
No, business as usual there as well. Down to 500 FICO, 100% purchase. One of the new things that did come out this year, it's probably been shadowed in all of this, is that the conforming limits that we were talking about earlier, VA lifted the first of this year, that essentially, a veteran can purchase well above the county limits. So essentially a VA jumbo loan.
Gotcha.
Those do exist. One of the things that you're seeing, because there's a little more risk concern from investors, the rates are running a little bit higher than normal. But again, I do believe once the economy starts to open again and we have kind of a return to normalcy, I think we'll see all that stuff start to kind of flatten out and get back to business as usual.
Conventional.
Business
Any
as
change?
usual, no overlays. We're underwriting directly to Fannie and Freddie. We run it through AUS per their guidelines, and that's exactly what we write it to. There are other lenders within the market, and I take one step back. Unfortunately, 60 days ago, all lenders were pretty much created equal. Fast forward to today, it's really lender specific right now, depending on what their risk appetite is, how big their balance sheet is, for what they're willing to take on from a risk standpoint. What I mean by that is servicing is the big concern right now. We have to make the payment to the investors, whether they go into, forbearance program or not.
Yeah.
So right now, a lot of lenders who are maybe a little bit cash strapped, they're starting to tighten up their credit box because they don't want to take that on. So I guess,
but as far as regulations, everything's the same.
Correct. Yeah, nothing's changed there.
All right, talk to us about 203K. For those of you that don't know what a 203K is, they are renovation loans. A lot of times, these have been hot in the past. Someone buys a house that, especially now when inventory is limited, and they say, well, I don't really like the kitchen or whatever, it's outdated. They can roll those renovations into their loan. 203K, they're good now, bad now, they're done. I heard they were done. Are they done?
Not with us. There's still business as usual at the moment. The nice thing about 203K, it's got two levels. You got the streamline, which is essentially up to about 30,000. It's really 35, but there's a contingency reserve in there. But up to about 30,000, if you're talking about kitchen renovation, 203K is great for that on their streamline. Now you do a 203K full, you can essentially renovate the entire house down to one remaining wall. So great program, for somebody who's looking to, because if there's a lot of deferred maintenance on a property that, somebody's exiting, 203K is a great option. And, there are some excellent lenders out there as well that, if you're looking maybe outside of the traditional agency credit box for renovation as well. So a lot of great opportunity, from just a rehab standpoint out there still.
So on the 203K, I know a lot of times the sellers roll their eyes because, the experience when you tell them how long it takes sometimes to go through the process and there are ways, there's certainly lenders that are better at and more prepared at getting these things done. A lot of people, years ago when they first came out, no one really understood them and they took forever. With that being said, we did start to see where within 45 or 60 days, it was quite possible to close a 203K, pretty seamlessly. Has that changed? So
not for us. We have a dedicated 203K staff. So once we have a client that enters into a 203K, says, okay, look, I want to renovate this property. I'm going to see what does that entail. From there, we bring in our construction specialist, and they will actually, in unison with the loan officer, kind of walk everybody through it to make sure we get it done in a timely manner. Because again, it is a little bit unique, and it is a forward mortgage, but it's a little different than just going out and buying with a conventional loan. So for that, we decided it made sense to have a dedicated team and staff to that. That's, for all intents and purposes, let's call them your renovation or rehab concierge. And that's really helped, with what you were saying before. There's still a lot of lenders that don't understand and try to stay away from them because it's just not something they're proficient at. So instead of staying away and not servicing the market properly, we decided to put a kind of that concierge team in place so that we could keep things moving, in a 45, 60-day contract. As of today, yes, we're still moving along at that speed.
Great. Investor loans.
Yeah, they took a hit. A lot of them were being funded through Real Estate Investment Trust, and they were kind of the first ones to take a hit in the liquidity crunch back in March. It wasn't anything like '08 where it was a run on the banks because nobody was paying their mortgages and bad loans were written. It was not that. It was strictly fear. And people started pulling out the REITs. So all of those programs, look, we do agency, you can do a Fannie Mae investment purchase program with as little as 15% down. But some of the more exotic stuff that we've been talking about, 30, 60 days ago, all of that stuff is temporarily on hold. And that's kind of an industry-wide thing right now.
It's Fannie Mae as far as up to 10, up to 4-unit 4-unit dwellings for an investor buying it personally. I mean, those programs still intact?
Yes, they are.
Okay. And great. So USDA, any changes?
No, business as usual there as well. The only thing I would say is, depending on the region you're buying in, you could be subject to the USDA field office turn times. So whenever we have a USDA request, depending on the geographic location, we typically reach out to the field office just to see, hey, we've got a deal that's potentially coming in. What is your turn time? Are you guys at 3 days? Are you at 17 days? It does vary based on region and just based on the time of year. So it's business as usual there, but I always caution that, if you have one, definitely go, err on the side of caution and go with a much longer contract.
If you have a USDA and they're saying they want to close in 30 days, we say, it's not happening. We need to be.
Yeah. I mean, as much as I want to tell everybody what they want to hear, I think the proper management of expectations is, 45 days with the understanding that if the field office is running on, some type of delay, that could be something that could slow us down. Again, something that, as we get into the file, it's our goal because we are a full service lender, to get it underwritten as quickly as possible so we can ship it out. And then once it's with the USDA, hopefully 2-3 weeks before settlement, if we start to see any type of delays, we can get to all parties at least 2 weeks before settlement and say, hey, look, guys, it's unfortunate. Here's what we're dealing with. If we can do a week or two extension, excellent. If not, we understand. We always want to get that message out as quickly as possible so that all parties can make an informed decision.
We just want to make sure that everybody's realistic when we're looking, because now you're getting so many, and guys, for our agents, part of what we do is we have to look at these offers that are coming in, and our clients are looking to us for advice. And we just really need to make sure that we're mindful, that we understand. I mean, we're not mortgage people, but we need to be in communication with the buyers, lenders, to try and make sure, before we're advising our client, that the timelines are really reasonable. And, it's not a bad idea to pick up the phone and call somebody else just to ask, and get some backup. Just so that we can be advising our clients, with what's going on. John, real quick, and you kind of said on credit score, what are you seeing any major changes here in the borrower pool? I mean, are people, as a result of this, things kind of staying the same, or are you seeing any kind of dips in, eligibilities and things like that?
So far, nothing. Now, I think if the economy remains closed for, several months, I think we will start to see something. But at the moment, credit scores are holding strong. Like I said, we haven't tightened up our credit box. So in the event that somebody, has a 620 score, 600 score, and they're looking for an FHA purchase, we would be able to facilitate that loan. So yes, at the moment, no real change in credit scores. However, I think, we continue to have a closed economy for, a few more months. I can almost guarantee that would change.
Yeah, well, we hope that doesn't happen.
Agreed.
So let's talk about appraisal. So, I've had a couple appraisers that have called me up in reference to, some of our listings and things, and say, hey, we're not going inside. We're doing, exterior appraisal only. And then, I've heard that there's been a lot of backlash. Lenders have been dropping these appraisers, just basically taking them off the schedule if they don't want to go inside. What's going on now with the appraisers? Are they going inside?
So it's really case-by-case basis. We have a great AMC appraisal management company we've been working with for about 10 years. They've done a great job navigating that for us. As a lender, we can't talk to the appraiser direct. So, we really lean on them as an excellent, third-party vendor relationship. And they've really done a good job. Like I said, case by case, they communicate with, whether it's a vacant property.
If it's not vacant, are they going in? Are you finding they're still going in or they're not?
They are. At first, yes, everybody was really, really concerned. But now that people are starting to understand what's going on a little bit more, people are taking more precautions. I've heard a lot of feedback from appraisers that we've sent out in the field through our current AMC that they're coming in with just short of a hazmat suit on, or very cognizant of not touching things. So, and we are, as a full service lender, we are set up to do the drive-by, accept that at the agency level. And, for the right scenarios, we're getting property inspection waivers on purchases as well.
We've been doing our part too. I mean, if you just let the inspectors know, or the sellers, hey, turn all the lights on, open all the doors, make it as easy as you can, make sure that, no one's in the house.
Right.
So, hey, John, real quick. So I just want to let everybody know, having John on, we like John, but I just want everybody to know this doesn't represent any kind of a partnership or endorsement. And this information obviously is for informational purposes only. But John, go ahead, tell them what you do, and go ahead and plug yourself for 30 seconds, man.
Perfect. So, I've been in the mortgage industry pretty much my whole life. My family, dad started in, 78. So I grew up in it. I don't know anything else. I've been working with my current group for about 10 years now. Just really, we want to get out and help the market. That's ultimately what we're doing. As a full service lender, we've got all the product suites, from the time we originate the loan all the way through servicing. So, we really try to make it a very streamlined process. And look, that doesn't mean it's always going to be perfect, but we really strive for perfection here. As a 5-star lender, as a full service lender, we take what we do serious, because there are many that don't. And, for that, we just want to make sure that people have a positive experience. So once they buy a home, it's not this, oh man, that was the worst experience of my life, I never want to go through it again. It's the biggest purchase of your life. And we understand and we really respect that, and try to give every client the maximum amount of service that we can, so that they can make an informed decision, because ultimately an educated and informed buyer is the best buyer. And that's really what we do throughout our process, is just educate you so you can actually make the decision for yourself.
Awesome. Well, we really appreciate it. And John's going to stick around for Q&A at the end of our meeting. And so his information also is on this slide. Again, it will be published in our show notes. Feel free to reach out to John directly. And let's just keep right on going. So I wanted to just bring you up to speed with some company updates. This is our third year, Sachs Realty. So I'm very blessed. I thank everybody for just that's been involved with giving us advice and support, and our agents for showing up and doing what they do, and for their professionalism. But we're really excited. We launched in August of 2017, and it's been a lot of fun. I can't believe, it's been 3 years almost. Wanted to let everybody know, and I'm certainly not bragging. I'm just very blessed. In the middle of a pandemic, we are up 43.3% year to date from last year in sales. So very excited. We're doing that through many different ways. Obviously, great agents, supporting them, developing, working on systems that work, and just surrounded by great people. So thank everybody for that. We have, through implementing our strategy meetings, we have worked on programs that have quality over quantity standards, and my staff and my agents have been integral in us implementing that. And I can't say enough on how much I appreciate that. We know that we've been working on brand initiatives and a lot of different things that we're doing to let people know that we support our agent and we stand behind everything from start to finish. And really excited to say that on May 19th, we are launching a podcast that will be audio and video on Tuesday evenings from 8 to 9 p.m. Eastern time, and it's called A Broker's View. And basically, we will allow callers everywhere to just call in, ask questions about home buying, home selling. Other agents can ask questions. I will, from time to time, be joined with other brokers throughout the country, and also other service providers, and just to bring great value to people that are very interested in the real estate market and industry at large, whether you're a buyer or seller or working in the industry, and just a way that we can help answer questions. If you know of anybody that should be with me in an episode, a podcast episode, please reach out to me. Let me know. I'll be happy to talk to them about that. And also, we'll be streamed live Facebook and YouTube, and then recorded versions will be on the respective channels as well. Our weekly YouTube videos have been doing very well. We're very fortunate to say we have 300, I think as this morning, 304 subscribers. So if you're watching this right now and you haven't subscribed, I really appreciate you doing that. It means a lot. Hit the bell so that you get an alert when we post. We're very cautious in particular of what we post. We don't want to waste your alerts or your emails going to your inbox for nothing. So we're really focusing on trying to bring great value. We have it broken down into playlists. You agents that are with us know that these are great resources as well. And we try and bring a lot of current information, social media. I'm really excited to say a lot of you watching may know internet star Scott Bentley. Scott and I will be podcasting, and Melissa today at 2 o'clock. It won't be live, it'll be recorded, but he is a phenomenon on TikTok. So we'll have that podcast brought to you very shortly. My kids who live out of state know who Scott is. And so Scott, they were like, you know Scott? But anyway, so I'm excited. I think Scott's almost at 100,000 followers on TikTok, and we're going to learn more about him today. I'm excited to also say that we are working on a nationwide relocation service that we are initiating here at Sachs Realty. I think that, agents have a choice, obviously, where they can hang their license. We're very particular, and so should they be. But one of the things that we're always looking to do is to find ways of adding lead value to our agents. And we're working very hard on this nationwide relocation service so that we can bring really even abroad people that are relocating to Maryland right now. We want to be able to help their clients and their friends. And so we're working with brokers right now in launching that. And it will be a couple months, but really excited about it. Something also I want to talk about is we're starting a scholarship program. So to a lot of people out there that have been affected by COVID-19, this isn't necessarily, a bad thing. And I'm not talking about health. I'm talking about career, as far as your career, because, you may be furloughed right now, or you may be laid off, or looking at your current career and saying, you know what, I don't really want to be doing this anymore. We are going to launch a new scholarship program for people that are interested in becoming licensees in Maryland. I am going to pay for 10 new licensees to go to school and get their license. We're working on a scholarship program right now that Sachs Realty will offer. We're working with our attorney to make sure that we're compliant in how we do this. But really, if you're interested in that, reach out to me or Melissa and let us know if you know someone that has been affected and would make a great real estate agent. I'm interested in talking with them and having them learn more about this scholarship opportunity that I'm putting forth. And then finally, just wanted to touch base on Zillow leads. We are starting back up our Zillow lead program. We're working with our representatives at Zillow now. We had launched that back in September of 2019, and we really did well with it. We had a lot of leads and resulted in some great sales and some great relationships and some really happy agents here at Sachs Realty as a result of Sachs Realty putting forth this lead program. So we launched an E-team. We put it on hold for a couple months due to obvious reasons, but I'm excited to say that we're bringing it back. So if you're watching this and you're interested in joining Sachs Realty and you want to learn more, I would be happy to talk to you about our opportunities that we have here for you to join us. So let's talk about open house guidelines. Let's talk about open houses because we had an open house this weekend in Howard County, and we did, have a couple people reach out and say, hey, is it legal? Should you be doing that? And they're all very valid questions. We've been in touch with our attorney, and that is very well known in the state of Maryland and in real estate. And, we're from an opinion that, that open houses can occur. Now, we canceled open houses. We were one of the first ones to cancel open houses when this pandemic broke out, even before the stay-at-home orders were in place. But we do realize that there are certain situations where it may be necessary. And, on a case-by-case basis, you must follow the guidelines that have been put in place by our governor and also by, if you're with Sachs Realty, by what we have put in place as a brokerage as to how you have to go about it. And, if you're an agent and you're wanting an open house and you're here, I'm not telling other agents, how to engage, certainly check with your brokers and your legal teams. But as far as, my people, in-person activities must be by appointment only. It's by opinion through our attorney that appointment only could be an open house from 2 to 4. That is an appointment. So, however, you still can only have 3 people at the most in the house at one time. If you have people that are coming, I recommend you have somebody that goes with you. Now, I don't know where that line came from. Somebody else is doing that. That's somebody else's screen. Anyway, have somebody with you. Make sure that people are socially distanced outside. You could take a phone number, text them when they can come back, set appointments throughout that open house period time frame. And, and that of 3 people that are allowed in the house, if you're in the house, you're one of them. So only 3 people at a time. You must maintain a 6-foot distance at all times. The CDC has all this information published. Real estate licensees, this is also published on the Maryland Realtors website. Real estate licensees who strictly follow the above protocols are permitted to engage in the following in-person activities related to this. You can obviously conduct listing presentations, take property photos, create virtual tours for your new listings, facilitate signing contract documents. We have opened our office back up to, settlements as long as these protocols are in place and that you're communicating with the other service providers and kind of collaborating with their guidelines. We are closed to the public still, but except for, situations where, they are relating to settlement services and our critical workforce, workforce infrastructure that has been put in place by our governor and the federal government. So really, if you want to have open houses, let's talk about them. I really want to be involved in those decisions. Don't just decide. But importantly, in red line here, guys, realtors will exercise their best judgment under the circumstances to provide advice regarding all aspects of the current real estate market. And we have in our systems all of the COVID-19 disclosures. So if you're having open houses or showings, our sellers must sign these. Buyers that are coming through, we want these signed by their agents. Please make sure that you're doing that to protect all parties, including ourselves. So I want to talk a little bit about farming, so we can get to a little bit of a positive note here. Guys, if you're looking at some of these market statistics, the interesting thing is there's a lot of houses that have been withdrawn, that have been expired. There's a lot of opportunities out there for marketing. I'm sure these sellers are getting bombarded when legally allowed to be marketed to. But really, if you're doing a good job farming, then you should be marketing to your farm as well. And certainly you don't want other people marketing to your farm without you at least doing it too. But for agents that have been with us here, we believe in picking a farm where you have 200 homes that in that farm, that 200 house polygon, that has been a 6% turnover in the last 12 months. I think that you're going to be able to still see that now because the numbers really haven't changed up to this point. So you'll be able to look over 6 months, see a neighborhood that's turned over 6%. This is you've got to do some manual work here. You've got to count rooftops. And then once you do that, you can go into the tax search and grab all those people and the owners or their mailing. If it's a rental, a high rental neighborhood, you can either market to the renters or you can market to the owners, their addresses. You can pick which one. But really, we should really be getting into doing our farms, heavy farming. If you're an agent with Sachs and you haven't been doing that, please pick a farm and let's get together and talk about ways to turn that into a real productive scenario. We have a couple agents that are doing this really well, and it's working amazingly so. But anyway, the goal here is that we're trying to get you 50% of listing appointments. And just real quick, guys, everybody knows a realtor. If we're farming and you're farming sellers and not buyers, or you're farming both, focus on sellers is that, and this is important. Everybody knows an agent, but everybody wants to talk to the neighborhood expert. If you're farming that neighborhood and you're that neighborhood expert, it's a lot easier to explain to mom that, Aunt June or their best friend or your sister or whoever. It's a lot easier to say that you're going with the neighborhood expert to sell your house because your house. You want people to know, you want the most money for it, and you want somebody dealing with that house that knows that neighborhood and who is truly the expert. So it's a lot easier to say, Mom, I went with the neighborhood expert than I did with Aunt June because Aunt June was 45 miles away. And anyway, but more importantly, the reason we farm is that we want to get interviewed. And that gives us an opportunity because they may still go with Aunt June, but they're going to call you anyway just to get your take a lot of times on what you think their house is worth. So the goal here with farming is that you come away with at least 50% of that farm's interviews and that you can close 25 or 50% of those. And then really that in a typical scenario of a 200 home farm, we're hoping that equates to 3 listings within the next 12 months. And it does. It works. So, if you're an agent out there and you want information on that, you can call me. I'll be glad to share any of our, information, the studies that we've done and how we do it. And you can even stay where you are. We're not going to pressure you to come with Sachs Realty, but we don't mind helping you as long as you're not in that farm. You want to farm close to where you live. A lot of times, I get agents that say, well, I don't really know. I don't want to farm my neighborhood. I want to farm the neighborhood down the street because it's full of $1 million homes. Guys, there's so many reasons why you should farm your neighborhood. I mean, if you look left and right of you and you say within the next 3 months, do you think any of your neighbors are going to put a for sale sign up? It's so easy to say yes, because it's true. So if you're not farming your neighborhood, you have somebody else in your own neighborhood. You don't even have your own neighbors calling you. They may not even know you're an agent. So that's one good reason to farm your neighborhood. But another reason to farm your neighborhood is because what if we get a windstorm like we did the other day, and the neighbor has to remind your client that 2 weeks ago's windstorm, your rider sign is still in their shrubbery. And now your client's pissed because you clearly haven't driven by. So, when it's convenient for you, you're going to service it better. And, so if you have all these listings in your neighborhood or a neighborhood that's close to your house, you have that windstorm, you're going to go by and check that rider and put that sign back up, or know that all your brochures are soggy, soaking wet. It's more convenient for you. And we know you want to be professional, but we also know you like convenience. I want to tie effective farming into LinkedIn, because one of the strategies that we're doing right now is that we're telling our agents and agents that are at Sachs, if you're taking that farm and you can identify who lives in that farm, you can connect with them on LinkedIn. So, it's a professional platform. You're not stalking them on Facebook. Everybody, there's so many people on LinkedIn. You can go to LinkedIn, kind of search for that person, send them a connection request and be like, hey, are you so-and-so that lives in such and such neighborhood? Because hopefully you've seen me in your neighborhood, or you've got my newsletters or something or other. I just like to connect with you and be a resource. So you can use that LinkedIn platform to kind of grab a little sphere of influence in your farm and see, connect to them and send them messaging from time to time, and just stay up to date. Keep them up to date. Stay connected. You can also create and invite them to Facebook groups. And I know people say, well, there's all kinds of Facebook groups out there. Let me tell you something. If you focus on this and you're really good at it, it's very effective marketing. Because what happens is when people belong to a group, when there's posts going on in that group, everybody learns about it. And I can tell you, as a company that has 39,000 plus likes on our Facebook page at Sachs Realty, it's hard to get engagement because they're not seeing your stuff. So only like 1%, sees, unless you spend money advertising to them. And now we're restricted because we're housing. So it's a special category. You can't just advertise to your people that like your page. But everybody will get your alert or your update when they're in that group that you created. So, tie your farming together online and offline. Zoning and development. You should know everything that goes on with your farm. You should understand, what new neighborhoods are going on, who the builders are, what the zoning issues are. I used to stay, when most of my work was in commercial real estate, but I used to go to every zoning hearing that was in areas of my interest so that I understood everything that was going on, so that I really could be that neighborhood expert. Just listed, private previews, open houses, just sold should be going out to your farm as it pertains to that, that your involvement in that farm. And really, again, just hitting them up with a monthly newsletter, and make the newsletter related to the farm too. If you're just sending out somebody's developed newsletter for you, that doesn't have anything to do with your farm, it's not going to mean a whole lot to the people that are there if you want them to actually review it, hold on to it. So, put a little information about you, some current update stuff that's happening with that neighborhood and the community, make it relevant, and people will want to look at it. So again, let's turn some focus back onto doing farming. We're going to get phase one is going to happen soon, and we're going to open back up again and really start getting on this, catch up, because a lot of people are holding back right now listing. So I don't think you've lost too much. Zoom is here to stay. Just like now, guys, if you're not using Zoom, you should be. We have one of our agents is getting ready to do a bridal show. He was involved in a bridal show that was to be in upcoming here this month. It got canceled, obviously, because of COVID-19. We strategized he's going to have it anyway. So he's going to have something called the 10 best days to marriage. Not the only 10 best days of marriage, but the 10 best days to marriage. And basically, he's covering, I think, 5 categories. And basically, he's Zooming with 5 different people in each category. So he's bringing DJs to them, caterers, venues, all these different things. And he's going to make it a big deal. And, he's going to market himself, but also he's going to open up the doors to all these, possibilities and relationships by launching these weekly, or daily 10 best days to marriage. But also I have a couple different things down here that may be ideas for you. You could do Airbnb previews in the neighborhoods that you serve. You could interview the owners. You could have them do virtual tours with you so you can grab some audience. Hey guys, today's episode, we're going to look at Airbnbs in Baltimore, and, just adding value and interesting things that you can post in social media and that has some staying power and some search engine optimization that you can put on YouTube and things like that. But, quickly going through here, you could do, annual events in the neighborhood, food tours, grab some of these restaurant tours, interview them, reach out to them. I mean, they're struggling right now. Now's the time to really be the hero in your neighborhood and provide some value for these restaurants, as well as, the people that live in the neighborhoods and the people that, more importantly, may be interested in moving to those neighborhoods. Home improvement DIYs. I mean, you could have, Zoom shows with, contractors, talk about, things that they could do to improve their houses, and, maybe things that they can do easily themselves, maybe things that they can do, order online, these little minor improvements while they're getting their house ready for market. Professional services, you could talk about all the things you're going to need when you own a house, insurance, things like that. Guys, really, you could be doing global podcasting. So, with LinkedIn, you could reach out, a lot of you have connections, you could see who they are. You could talk about, how people are, accelerating and doing different things in other parts of the country. Interesting things to give people to tune in and learn more about you and your service that you provide. And I mean, there's plenty that you can do to get creative with this, but, use these platforms that are out there. I promise you guys, you're going to come out of this so much better than you went in. If you just embrace these things, these technologies that are in front of us, and make them part of your business. Real quick, some housekeeping. MREC, Maryland Real Estate Commission, advertising checklist. We're still seeing where, some posts and things are, going out that are not, being submitted. Make sure that you're submitting everything. I mean, you guys know, and I'm not necessarily talking about Sachs Realty. I look at things and I'm not the advertising police, and the purpose isn't for that. I'm just trying to say, for everyone out there, this is published. There's very few things published on the Maryland Real Estate Commission website. Very few forms that are required when we're transacting, but this is on their website and is available for you guys. I chopped it up here for the purposes of display, but make sure that you're, accessing this. And, if you're with another broker or whatever, I'm not trying to tell you how to run your business, but this is on the Maryland Real Estate Commission's website as an advertising checklist. And we want to make sure here at Sachs Realty that we're in full compliance, and that means all your social media channels as well. We try and do that with all our videos. We have a tagline at the end, with the disclosures, and we try and help cover you guys as much as we can. But again, we want to see all your advertisements. Briefly, I just want to talk about some code of ethics articles. The code of ethics is broken down. This is just to let everybody know, full disclosure, this is not CE. I am not licensed to teach you CE, but I do want to just touch on a couple things. As real estate agents or realtors, we are really to live by code of ethics that is brought from a National Association of Realtor level, and then also a Maryland level, because laws are different in different states, and I don't know what happens in North Carolina, but I know what's going on in Maryland. But it's really important that we follow any of those amendments that are at your local level, and I just want to talk about a couple things, because one of the big things that I'm faced with, or that I'm asked to get involved with our agents, or calls that come in that pertain to agents, deals a lot with ethics. So I just want to kind of cover real quickly, and then we'll wrap up with some Q&A. So get your questions ready. But duties to the public. Article 11, basically that the main thing I want to point out here is that realtors shall not undertake to provide specialized professional services concerning a type of property or service that's outside of the field of competence, unless they engage in assistance of one who is competent of such types of property or service, or unless the facts are fully disclosed to the client. Any persons engaged to provide such assistance shall be so identified to the client, and their contribution to the assignment should be set forth. And what this is really saying, guys, is a lot of times we are stepping outside of our boundaries as agents. And, I hear a lot where, we're trying to be more than what we're supposed to be. And though, we want to be knowledgeable with mortgage or with title or with these various things, I just want to encourage you guys, to, utilize professionals that are in these, in their services, and refer them to professionals to get those answers. I always like to say, that's a very good question. And I'm not the expert to answer that question, but I can help get someone for you if you don't know of someone. But really, another big thing here is knowing the areas that you work. So what this means, a lot of it is, if you're going 50 or 60 miles for that listing, or showing a buyer and you don't know, engage somebody else in the transaction that can be of assistance. Don't be afraid to do that. It really is our obligation to our clients and to the public at large that, we pull in resources, and it's fine to do. I want to jump through here to Article 12. I get this a lot. I get a lot of complaints. I took my client out to look at this property, and, they're using pictures from 10 years ago. Or sometimes the temptation would be there, if you listed that property 3 years ago, to use some of those photos. Things change. Guys, let's be respectful to the public and the other professionals that are showing the properties. Let's make sure that we're giving a true picture in advertising and marketing that represents that property the way it is. There's a lot of controversy. I personally don't like doing virtual staging, but I mean, to everybody's choice and choosing, and liking. But I think that it should look exactly the way that it does when they go see it, that's represented online or on your website, on the MLS. And I went, just personally, to show one of my friends that is out of town a property. I went and did a virtual showing, and there was no pictures of the basement. And I went there, and, I knew why there wasn't pictures of the basement, but it was, would have been nice to see the pictures of the, what that property looks like in current day. Duties to clients and customers. I want to just really talk about, treating everybody honestly. A lot of times people will talk about representation and, whether they're a client, and it gets tricky in our business, a client and a customer. But I just want to say, let's make sure we're treating everybody fairly and honestly out there, and that we're working together for the greater good to get these transactions settled. And then Article 2, avoid exaggeration, misrepresentation, concealment of pertinent facts. Be careful not to advise on matters outside of the scope of their real estate license. And I want to just tell everybody just to be mindful again as we're coming into, really a selling cycle, that we're not attorneys. Let's not be writing these blank addendums. And a lot of agents don't realize that it's very easy to be charged with, practicing law without a law license. And we just want to be mindful. It's okay to remember that transactions happen between a buyer and seller. If you're wanting to write that addendum, ask the seller or the buyer what they want to say to the other party, and then ask them if that is exactly what they want to say, and put that in the addendum. And that's fine because it's between the buyer and the seller. But when we start writing these things that we don't, know what we're saying, or that people don't understand them, let's not go down that path. You guys know at Sachs Realty, make sure that if you're writing blank addendums, that you're at least running them by me, and that so that we can make sure that we understand what it is, and that it's really very minimal in an exchange. Duties to realtors. Realtors shall not engage in any practice or take any action inconsistent with exclusive representation or exclusive brokers relationship agreements. I wanted to just say that to make sure that as you're farming, guys, that you're making sure that, number one, that we see all of your advertisements that are going out, but that you have that little disclosure that if their house is listed with another brokerage, that is not to be taken as an advertisement to solicit that listing. It's very important that we are respectful, and I know that we all are, but just a reminder, because, we could ruffle some feathers out there if we're, marketing. A lot of times what happens is, if they, the client's under a relationship with a listing agent, they're showing them a lot of times what they get in the mail. So let's just make sure that we're being fair to them. So anyway, we touched on a lot of different things here today. You can chop it up however you want. We'll make sure in the show notes you can advance the things that are important to you. And this is a Sachs Realty sales meeting. So we know that as a result of this pandemic and how it's forced us to stay at home, we're going to continue to bring these things to you live, even when we go back in to real office settings, which I can't wait to do. So anyway, let's open it up. If anybody has any questions, Melissa, do you want to kick things off?
Thank you, John. That was really, it was awesome having you as a guest, and thank you for all of the information. Another question I just quickly had about the mortgage process. Is the time frame been extended, and by how much? I know just by overviewing the contracts, how far out should there be added time added on to the contracts?
Okay. Yeah. So one of the things that we've implemented, and it's different for all lenders. 30 days is still, an accurate turn time for us in escrow, because what we've done is we focus all of our efforts on our purchase business, not our refinance. So unfortunately, refinance has taken a little bit longer. Rightfully so, because we are a purchase-based company. So right now we're at about a 2-day turn time from initial underwrite through approval. With that, the only thing that's really slowing us down in some situations would be the appraisal. In the event that, appraisals are taking about 10 to 11 days right now. So in the event that there is a possible repair or something that's needed in addition to the first review of the property, you will find about halfway through the contract if there is a potential issue. So I would say really outside of, our process, which is moving along pretty well at the moment, I would say some of the third-party stuff can be an issue. Other things that we've run into and we've been able to overcome for the most part is getting a verification of employment. People are working from home. Sometimes it's hard to get a hold of the proper party. So it's really fallen back on some of the third-party services. But at the moment, the 30-day contract is still, I would say we're about 90% proficient on them. And in the event that we are going to extend, we're usually aware of that about it at the halfway point. And it's typically because of something with the appraisal, maybe a repair, or maybe the appraisal didn't come in at, the value expected. So as we work through that process, I would say that that's probably been the only thing that's been kind of putting a wrench in things for us. But other than that, as far as our review times, like I said, it's about a 48-hour initial review, and then we're on a 24-hour re-review. So, as long as we're doing everything we can up front, we still are hitting those targets. And again, if we're not going to, usually about halfway through the contract, like I said, it's a third-party issue, and then we'll at least get to all parties and let them know, hey, look, we're waiting on the appraisal, or in the case of the seller, if there's repairs to be completed, they're kind of aware at that point that they need to get the repairs completed, depending on if they can get a contractor out. So it's just things like that are compounding. But, as far as our process and procedure, we are moving right along at the moment.
So thank you very much.
You're welcome.
I don't have a question, Todd, but just appreciate the informative. Great to have a guest on with the finance update. So thank you.
Absolutely.
Just question, DLLR, have they paused license renewal, or are they still on time?
Yes, they're on target.
Okay, good.
And John, Brenda, she had sent a message. She said conventional conforming loan rates for home buyers with 740 credit are 3%, all-time historic low. Great time to buy a home.
100%. I mean, affordability is at the best level we've seen in years. So
that's amazing.
You can't go wrong. I mean, my gosh, rates as low as they are, and you're seeing government rates, push note rates that are, a little bit lower. APR is going to be higher because government, typically an FHA loan comes with MI. But you're seeing some pretty unbelievable rates in the market right now.
Yeah, and I know, so I've had people that have asked me, are they going to go into the negative? Well, we'll be looking at negative interest rates, and, depending on who you ask, I mean, there's some belief that we may, but, you can always, one of the things that's nice about buying a home that you're going to finance for a long time is you can always refinance it if it makes sense to do so. But boy, I tell you what, I'd hate to see it go the other way. If you are looking to buy, it's a perfect time to, certainly do that.
Agreed.
All right, guys. Well, thank you all so much for being on with us here, and we'll talk to you soon.
Sachs Realty, Maryland broker number 607720, office number 443-318-4514, equal housing opportunity.